All right, traders, welcome back to Steady Income Trading, another weekly update and review. Today is June 29th, and let's take a look at the past week performance, and then we'll talk about our dual mandate. First, let's see here. The week ended 0.9% up for us. Market is up 0.47. So great performance, and this is despite the fact that we didn't put any trades on between the, and if you take a look here, let's see. Between the June the 10th and 24th. So solid 14 days with no trades. As you know, I was on holidays, but we still perform pretty well. We let some of the trades run a little bit past the 60% profit target that we normally have, given our slight underexposure. Like, for example, this one here is at the moment is at 63. We didn't close it even though it was over 60% before the close on Friday. And we also closed couple of trades over 60%. As you can see right here, this is PCR at closing for this particular trade. That's pretty good and encouraging. Overall, we're doing great. As you can see, our blue line is pretty smooth comparing to the markets, which is a little bit more choppy than we are. I mean, we're going in the same direction and it looks similar, but our blue line is a little bit smoother, and that's great. That's what we're trying to do. We are taking this measurement only once per week on Fridays, so if we had taken it more often, maybe it would be a little bit more choppy for us as well. I don't know, but overall, this is good. I like it. And this is the year-to-date performance. And this is last year, and this is the overall performance since inception, which was a little bit over 2 years ago. And it's important to keep in mind, this is not a back test that you would run on Option Omega or similar. This is the actual real-life results, and this is very important. And you know, for those that maybe only started following me, you can go back. I put all of my trades on live and everything is recorded. There's a video for all of them. So you can really see how this develops over time. So I think that's really helpful to keep in mind. Now, let's talk about our dual mandate. Just like Fed has a dual mandate, we have it as well. Ours is a little bit different. And it's basically we have two main things that we're concerned with, and those are CAGR and MAR ratio. Everything else that we do is basically just serving the purpose of maintaining those two things. And for our CAGR, we want to make sure that our long-term CAGR at any point in time, whenever we look back, it shows 20% or better. Like right here, you can see we're at a little over 20% right now. Now this includes about a year and a half of different trade other than UOTS, but similar in nature. One day when this right-hand side here, which shows only UOTS trade, which is from the November of last year, pretty short. Once this has enough data, maybe we'll just concentrate on this to have a little bit better picture for the strategy itself. But nonetheless, this is good right here. And as you can see, we're maintaining our CAGR mandate of 20% or higher, and then the other one is MAR ratio of 1 or better. We are at 1.89, which is really good, and hopefully it doesn't go much below that. Anything over 1 would be fantastic. Over a long period of time, of course. And just for those that don't know, this basically in simple terms just means this is the drawdown as compared to our CAGR. So if we are maintaining a 20% CAGR, we don't ever want to have a drawdown larger than 20%. And in that case, our MAR ratio would be 1. Now, since we only had the maximum drawdown here, 10.91, and our CAGR is a little over 20, our MAR ratio is a little bit under 2. As you can see, SPY, even in this 2-year period when the market has generally been going up, SPY MAR ratio is worse than ours, significantly worse. It's 0.86, so under 1. The maximum drawdown for SPY or for the market in general was 16.37 for the time recorded, and the CAGR was 14.06. On a shorter time frame here, since the UOTS, we are at 30%, which is obviously significantly beating our mandate, which is to be expected with the market going straight up. This will reverse at some point, and we might go under 20% for a short period of time. But overall, we want to stay at 20%. CAGR for SPY has been even higher. As you know, market has been ripping higher. So, but these numbers are too short of a time frame, and we don't pay too much attention. We look here until we get a couple of years of data here. So those are the two mandates. Everything else revolves around that: our hedging, our scheduled trading, the frequency of trading, our target premium sold. Everything is for the purpose of achieving those two goals or two mandates. So, all right. That's it on that. We don't really have much else to talk about for this short update and review. We have few trades going on. Our next trade will be on Monday, right here, Monday the 1st. And that's it. At the moment, we are slightly underexposed, so we're okay leaving some of the trades going past the 60% profit target. But that's it. If you find this video useful, do me a favor and like it. That helps the algorithms show my videos to more audience. And consider subscribing if you didn't yet. Have a fantastic rest of the weekend. Bye.